The FDIC is in the spotlight more than ever these days. It was founded during the Great Depression, and today the Federal Deposit Insurance Corporation insures more than $4 trillion of your money in over 8,000 banks across the country. Joining me now is the FDIC Chairman, Sheila Bair, who was recently dubbed the world's second most powerful woman by Forbes magazine. Pretty nice Forbes magazine mention there. Right. Nice to have you on the program.
Thank you.
Thank you so much for joining us during this really important time for our country. What a tumultuous week.
Yeah.
Tell our viewers who may be nervous if their money is safe. Should depositors be concerned?
No, depositors should not be concerned. They should make sure they're below our deposit insurance limits. And we've actually launched a new website this week, www.myfdicinsurance.gov, where they can go on if they have any question about whether they're in our coverage limits. There's a very user-friendly calculator called the Electronic Deposit Insurance Estimator, or ED. They can put in their information and make sure they're fully insured. If they're below $100,000 per institution, that's not per branch, but per bank, or under $250,000 for an IRA, they're fine. They don't need to worry about it. If they're over those limits, they may still be insured if their accounts are structured properly, but if they're over those basic limits, they really should go on this website and double check.
Some people say, look, can the FDIC afford to be insuring, you know, all of the situations? I mean, your insurance fund is currently at a little over, what, $45 billion, $45.2 billion, below the minimum level set by Congress. So the IndyMac failure in July cost nearly $9 billion. Are you going to have to go to Treasury for more capital?
Right. Well, a couple of things. We will not be the ones. They're using the Exchange Stabilization Fund to back the money market accounts. So the FDIC reserves will not be used to back these money market accounts. So that's number one. Number two, I think it's important for people to understand we're a government agency. We're backed by the full faith and credit of the United States government. We have long-standing lines of credit with Treasury, which we can tap into if our industry-funded reserves become insufficient. I don't anticipate that happening. We've done a lot of stress scenarios, and even under high-loss situations, we think our industry-funded reserves will be more than ample. But we do have a lot of flexibility to borrow from Treasury if we need to, and there's really no way that we would not fulfill our guarantee.
Well, what's your success been in terms of addressing the foreclosures among the IndyMac customers?
Right. That's a very good question. We launched our loan modification program in late August. We have mailed out 7,000 modification offers. We already have positive responses for 1,200, and we're processing others. We have a very good response rate, 40 to 50% on our mailings, which is very high. One of the issues here for servicers trying to restructure loans is getting the borrower to communicate. But we've got a good success rate, and we're using systematic approaches. We are basically using a debt-to-income metric for everybody. If they can document income, we will get their payment lowered to a 38% DTI by either lowering their interest rate, extending the amortization, or if necessary, deferring principal. So this is a basic metric that we're using with each borrower.
Now, even though we are seeing this big, support from the government, we continue to see bank failures. You recently increased your problem bank list to a total of 117.
That's right.
Totaling $78 billion in assets. How many more bank failures, I mean, might we see? And are we talking about big banks? Characterize what we're seeing in terms of bank failures.
Well, by historical standards, we're still operating at fairly low levels, both for the number of banks on the trouble bank list and the number of failures. We've had 11 failures this year, which is, again, low by historical standards. During the S&L days, we were closing one a day. I think it peaked in 1989 at 534 bank closings just in the year. So 11 bank closings is not a big deal from an historical perspective.
We have a lot of banks.
And we have 8,500 banks, that's right. So 13 trillion in assets, 78 billion on the trouble bank list, and only on average 13% of the banks on that list actually fail in a given year. So it's really, I don't want to understate the problem. There are serious challenges out there, serious uncertainties about the economy, but banks so far have been weathering this pretty well. At the end of the second quarter, 98% of banks were well capitalized, representing 99% of bank assets. We have very elaborate regulation of insured depository institutions, strong capital standards, and I think we do need to differentiate between insured depository institutions, the traditional bank, they have the FDIC sign on them, versus investment banks, versus insurance companies. These are different types of entities, and a lot of the turmoil has occurred outside of the banking sector, and I think that's important for depositors to understand.
This is really a great conversation. Thank you so much, Sheila.
My pleasure.
We really appreciate it. FDIC Chairman Sheila Bair with me here.